Good evening. Good evening.
Good evening, ma'am.
Very good evening. Please revise depreciation. Depreciation chapter of accountancy. The previous day we started with depreciation. We saw the meaning of depreciation, factors affecting depreciation. Yes? And also saw two methods. Keep the videos on.
Ma'am, your mic is muted.
Ma'am, you're muted.
Yes, tell me what is depreciation? Louder. What is depreciation?
Fall in value in tangible assets.
Fall in the value of intangible. Intangible?
Tangible.
Fall in the value of tangible assets are called depreciation. So, what is fall in value of intangible assets called?
Amortization.
Amortization, very good. And how about fall in the value of wasting assets?
Depletion.
Depletion. So all these three terms, depreciation, amortization, depletion, all these three terms means it is reduction in the value of asset, but which assets? Tangible, intangible and wasting assets. Okay. Coming to methods. Methods of calculating depreciation. What was the two methods? I had asked you to draw that picture and keep. Yes?
Can you repeat the question?
What are the methods of depreciation?
Straight line method, written down method.
Straight line method and written down value method, WDV. Okay? Straight line method, SLM. Now, what is SLM? What is the peculiarities of SLM?
Some amount will be depreciation constant every year.
Every year it is constant. It is on which amount will you will calculate depreciation?
Cost of the asset.
Cost of asset, very good. Cost of asset, it is on the cost of asset that depreciation is calculated and it will be constant throughout the life of the asset. And what happens? At the end, what happens?
Value will be zero.
Value of the asset becomes zero. Very good. The second method is a written down value method. Again, the depreciation each year it is calculated upon the written down value. And what happens to depreciation? Depreciation will be decreasing. And value of asset never becomes zero. Okay. That was the two methods for calculating depreciation. How to find out depreciation. Now, next we are going to see how do we record this depreciation in the books. The accounting treatment, books of accounts. How is it recorded in the journal? Okay, how will the ledger accounts prepare? After journal, we prepare ledger. Yeah, so how is this maintained in the books of accounts? That is the next thing we are going to see. Here also, we have two methods of recording depreciation. Keep the video on. The first method is charging this depreciation to asset account. Actually, what is this depreciation? Yeah, it is the value, a reduction in the value of assets. That is okay. That's fine. But where is this amount? This depreciation, we treat it as expense. Okay? See, suppose there is a machinery. We are not finding out the depreciation, okay? Listen to me. There is a machinery and we are not finding out what is happening to it, like the reduction in the value, we are not considering it. So what happens? After the continuous usage, after some point of time, it will stop functioning. It will be dead one day. It won't function. Correct? With the continuous usage, definitely it will get spoiled. It will be damaged. So what happens? At that point of time, we have to purchase a new machinery. To purchase that new machinery, where is the cash? You need to find out cash for that. Finance is required, fund is required to purchase a new one. So for that, what we do is, we are reducing some amount every year. We are estimating that there will be fall in the value of asset. And it is our estimation that, okay, this year, suppose this is say, every year, 25,000 is getting reduced value. So what we do is, this 25,000 depreciation, we are setting it aside. We are keeping it aside. It is not going on anywhere else. Actually, depreciation is expense. But this expense, we are not paying it to outside. Instead, we are maintaining it as, we are setting it aside. We are keeping some money, foreseeing that we will have to purchase an asset later on. Did you get me? Say 1 lakh rupees. There is a machinery worth 1 lakh rupees. Okay. After 1 year, the value gets reduced by 25,000 depreciation. This is the amount of depreciation. So we know that with the continuous usage, the value will get reduced by 25,000 rupees. So what we do? We will reduce this 25,000 and keep aside this money. 25,000 is kept aside as savings, not as savings, but we are keeping it aside, foreseeing that later on when the functioning stops, we will be purchasing new one. For that you require fund, no. So for that, we are showing this as a reduction and it is actually a non-cash expense. We are not spending it anywhere. This expense is not going anywhere, but it is maintained within the business. Okay, did you get me? So keep this in your mind. Depreciation is actually expense. It is considered as expense. The account classification, asset, liability, expense, income. Expense or loss, incomes or gains. So this depreciation, it is considered as expense. Okay. Now, we have two methods of recording this depreciation. Charging depreciation to asset account. That is one method. Under this method, depreciation is directly credited to the asset account. Okay? It is shown as reduction to the asset account and no separate account is prepared for provision of depreciation. Coming to provision of depreciation. It is another account. We will have one account called depreciation account. Okay, listen. Depreciation account, and there is another account called provision for depreciation. This is also another account. Provision for depreciation account means, as I said, the amount of this depreciation 25,000, no? That we are keeping it in a separate account. Like piggy bank, you put the savings in some other, in a piggy bank, no? Similarly, in a separate account, you are keeping this depreciation money. In a separate box, you put this depreciation money. That is provision for depreciation. Is it clear? Provision for depreciation, just imagine it as your piggy bank. From your whatever money you get, you keep some points or something inside that piggy bank. Similarly, the business will keep this depreciation in a separate account. Put it in the separate account. That is provision of depreciation account. Okay. Under this method, which method? Charging depreciation to asset account. The original cost of an asset and total amount of depreciation cannot be determined from the balance sheet as the asset account appears at its written down value. This means that in the balance sheet, we will show the right side for assets and the left side for liabilities. Okay? I know we haven't learned this in detail, but I have told you about balance sheet. You remember? Balance sheet, it is a financial statement. Last, we'll be preparing that. And from there, we'll understand what is the position of asset and liability. We will record assets in the right side and liabilities will be shown on the left side. At last, asset should be equal to liability. Asset and liability and asset, both the sides should get tallied. That is balance sheet. So, it is the assets and liabilities that we show in the balance sheet. Only the assets and liabilities will be shown. So, this, according to this method, suppose it is the machinery. Coming back to machinery, this is balance sheet. We will show this as machinery account minus depreciation. Suppose it is 1 lakh rupees. The value of machinery is 1 lakh rupees and depreciation is 25,000. So in the balance sheet, we show the amount 75,000 as a reduction from the value of asset. Okay? Wait, I'll explain again. This is the first entry. When depreciation is charged to asset, depreciation account debtor to assets. Keep the video on, please. Depreciation, I told you, it is an expense. Asset is asset. Now, think of the rule. Expense increase. Expense increase. What we do? We debit. Remember? Assets decrease. We credit. Remember the rules? So, depreciation is an expense. It is increasing. So, depreciation account debtor. What happened to the machinery? Machinery was 1 lakh rupee, but it is getting reduced. Asset, value of machinery, which is an asset, it is getting reduced. So, asset decrease, we credit. So, this is the first journal entry. Is the entry clear? When depreciation is charged to asset account, depreciation account debtor to assets. Now, this will be more clear only when you finish learning this financial statement. But still, I have told you before, at the end, finally, we will be preparing financial statements. Which are the financial statements? Trading and profit and loss account, balance sheet. Okay? I told you about balance sheet. In the balance sheet, we will record assets and liabilities. What about the expense and incomes? We have 4 categories, no? 4 categories of accounts. Asset, liability, expenses and losses, incomes and gains. We have 4 categories, 4 groups. It is in the trading and profit and loss account. There is another account. First, we will be preparing trading account. Trading account. Okay? It is together. Actually, this trading and profit and loss account is a single account. We show it as 2 separate divisions. We will learn it. Don't worry. Don't think about it now. But still, I'm telling you as an introduction, there is a separate account called trading and profit and loss account. Trading and profit and loss account. First, we will prepare this. From this, we will be getting net profit. Okay? From trading and profit and loss account, we will get the net profit. So, this account will help us to understand whether the firm has made profit or loss. After preparing trading and profit and loss account, the final step is balance sheet. So, what is recorded in balance sheet? What do you write in balance sheet? Assets and liabilities. In the balance sheet, we will be showing only assets and liabilities. Keep this in your mind, please. Okay, so what is recorded in trading and profit and loss account? It is the expenses and incomes. Whatever expenses are incurred in the firm, in the business, that we will write it in the debit side. All the incomes and gains, we will write it in the credit side of trading and profit and loss account. Now got the idea? All the accounts in the business, it is divided into 4 according to the modern approach. Asset, liability, expense and losses, incomes and gains. That is a 4 classification. Correct? Okay. So, the financial statements of a company, of a business, the financial statements includes trading and profit and loss account and balance sheet. So, which are the financial statements of a business? Financial statements of a business are trading and profit and loss account, balance sheet. Clear? Now, all the expenses and losses, incomes and gains, we will write it in trading and P&L account. What do we write in balance sheet? Assets and liabilities. Clear? Okay. So, coming back to depreciation. So, I told you depreciation is an expense. So, where do you write it? Is it in trading and profit and loss account or balance sheet? Where do you write it? Say, try.
Which one?
Which one?
What's the question?
Depreciation. What is depreciation? It is an expense. I'm asking you, it is an expense, I told you. So, where are we going to write this depreciation? Is it in trading and profit and loss account or balance sheet?
Trading and
Right. Yes. So, this depreciation, it is an expense. So, we will be writing it in the debit side of trading and profit and loss account. Okay? So, look at the entry. We are going to close this depreciation account. Profit and loss account debtor to depreciation. See? Let us revise ledger. Profit and loss account debtor. That means profit and loss account will be debited. Come to the debit side of P&L account. There we will write depreciation to depreciation. Remember? Ledger? Profit and loss account debtor. That means profit and loss account is debited. Come to the debit side of P&L account. There we will write to depreciation. So the depreciation, we have to show it in two places. That is, in nutshell. Where do you show it? First, as it is expense, we will be showing the depreciation amount in the profit and loss account. Okay, this will be very clear once you learn the financial statements, which will be starting very soon. So just listen and understand. Depreciation, we will show it in two places. Profit and loss account debit side, as well as in the balance sheet as reduction from the asset. Asset minus depreciation. I showed you, 1 lakh machinery minus depreciation 25,000. So the value of asset in the balance sheet will be 75,000. So that means this depreciation, we will show it as reduction, deduction from the asset in the balance sheet. Clear? No, it's not clear. Yes, Rahul. Yes. You want to ask something?
No, can explain one more time.
See, this depreciation, it is actually an expense. Okay? So, now we are discussing, the topic we are discussing is, how are we going to write this or deal with this depreciation in the books of accounts? Yes, that is what we are discussing now. How is this depreciation written, recorded in the books of accounts? So, the first method is charging depreciation to asset account. Okay, charging depreciation to asset account means we will be reducing this depreciation amount from the asset. That is how we are going to deal with it. charging depreciation to asset account. Okay. Okay. Now I told you these are the two journal entries that will come in this method. First one is when depreciation is charged to asset account, depreciation account debtor to asset account. That is the journal entry. Depreciation account debtor to asset account. This means that we will be reducing depreciation from asset in the balance sheet. Is it clear? This is the first journal entry, depreciation account debtor to assets. That means we will be reducing depreciation amount from the assets in the balance sheet. Okay? The second one, we are going to close this depreciation account. So, that time we have to pass this journal entry. That is profit and loss account debtor to depreciation. Now, let me tell you, always this depreciation, we have to show it in two places. That is the conclusion. This is how we journalize it. Depreciation, we have to show it in two places. We have two financial statements, trading and profit and loss account, balance sheet. We have to show this in two places, both in the balance sheet as well as P&L account. We have to show this. Clear? It is an expense. Depreciation is an expense. That's why we will write it in the profit and loss account. This is profit and loss account, debit side, expense. So we will write here to depreciation. Also, in the balance sheet, we will write it as asset minus depreciation. So you got the two places, profit and loss account, also balance sheet. Correct? Okay? Don't worry, you'll understand this when you learn that. I know. Without knowing financial statements, how do you understand this? But it's okay. Understand these two concepts. Depreciation is an expense. All the expenses and incomes we will be showing in the final account called trading and profit and loss account. Trading and P&L account, profit and loss account. That is the first financial statement. Then we have balance sheet. Balance sheet. Balance sheet. In the balance sheet, we will be recording only assets and liability. Assets, it is fixed asset as well as current asset. Liability, we will have fixed liability, non-current liability and current liability. Remember all that? Yeah. All this will come together in the financial statements. Trading and profit and loss account will help us to know whether the business is making profit or loss. From the name itself, you got it, profit and loss account. Whether the business is making profit or loss. Balance sheet will help us to understand the financial position. How much is the asset? How much is the liability? Okay? Yeah. Now, the second method, wait, listen. The second method is creating provision for depreciation account. Creating provision for depreciation. As I said, we are going to make a piggy bank for depreciation. A separate account, a box we are going to make. It is not a box, it is an account, okay? In a separate account, we are going to put this depreciation money. Here, we are not going to show as reduction from the asset. Earlier case, we wrote it in the balance sheet as asset minus depreciation. So what happens to the value of asset? If suppose asset is 100 rupees and depreciation is 25 rupees. So what happens? Value is reduced and it is the 75 rupees that is shown in balance sheet. Correct? But in the second method, we are not going to do this. No. We are not going to do this. Instead of this, we are going to put this 25 rupees in another account. In another account called provision for depreciation account. So what happens? In the balance sheet, asset will be shown as 100 rupees itself. Okay, 100 rupees itself. We are not going to change this. And where is that depreciation money now? It is in provision for depreciation account, separate account. We have written it in a separate account. Under this method, creating provision for depreciation account. Under this method, depreciation is not credited to the asset account. In fact, it is credited to the provision for depreciation account. At the year end, asset is shown at the original cost. Original cost in the balance sheet and total depreciation up to the date of balance sheet is shown as provision for depreciation account. There is another name for it. Provision for depreciation account is also called accumulated depreciation. Okay? Accumulated depreciation. Again, so the first entry, when depreciation is charged, the entry is depreciation account debtor to provision for depreciation. Instead of asset, in the earlier case, we wrote it asset here. But in this method, we are writing provision for depreciation account. Okay. Now, provision for depreciation account is a liability. Liability increase, you credit. Last, for closing the depreciation account, the entry is the very same. Again, depreciation will be showing it in two places. Both in the balance sheet as well as in P&L account we have to show. So the second entry is the same. Whatever is the depreciation, we will have to show it in the P&L account, profit and loss account as expense. Okay. Now just read the textbook. Read it. Peacefully read the points. This is enough for today. Read the textbook now.